It has been a mixed day starting for commodities. You have pluses and minuses there, starting with crude first. And while there's positive in sense of the earnings, which have been on the positive side, the US equity markets gain yesterday. You also have the Japan reiterating on the stimulus moves there. And apart from that, the Chinese imports number also showed some strength. But apart from that, if you look at the US inventories, those are at 22-year highs. There also have been statements from many OPEC members where they say that $100 per barrel on Brent is a more fair price. The Brent price is right now at $105 a barrel. So there is some more pressure coming in because of that, because of those statements as well. Also take a look at the gold prices, which have declined the most in last 5 months in the markets yesterday. You have the Cyprus planning to sell gold to increase or raise money for them. That has been a big negative coming in from that space. Apart from that, the Fed minutes yesterday showed that there has been speculating about curbing on stimulus by the end of 2013. That's swinging on to the prices as well. And then you have the Goldman Sachs report, which says that their year-end target for 2013 now stands at $1,450 per ounce. And for 2014, it's at $1,270 per ounce. And that really seems to be putting pressure in the global markets into that space as well. As far as the base metal prices go, where you have seen some pressure coming in for that one as well, 0.25% to 0.5% on the lower side is how most of them like copper, aluminum, zinc are trading. The Chinese export growth has disappointed the markets, and you can see the impact of that onto the prices there. How do you trade all of those commodities? For that, let's get in Hitesh Jain from IIFL, and he joins us on the show. Hitesh, hi, welcome. What's your sense now coming in for gold prices? The kind of declines that we have seen, what kind of range are you working with?
See, regardless of the recent decline, but if you see for the past 2 months or the past few weeks, see, gold prices have been trading in a directionless fashion, and we seeing a familiar price range on the MCX as well as the COMEX. If you see 1540, 1550 seems to be a good support, and 1610, 1620, 1615 has been a resistance. And on the MCX as well, 29,100 has been a good support, and 29,800 or 900 has been resistance. And prices have formed a habit of bouncing back from the bottoms of 29,100. And I think that should remain intact, or that should remain true for today as well. So we prefer to buy, thinking that prices should bounce back from these levels. For today, we prefer to buy the June contract at 29,150 with a target of 29,350 and a keeping of stop loss of 29,35.
Hitesh, also, what's your sense coming in for the base metal prices now? The Chinese data has been mixed, but the stimulus from Bank of Japan is something that really has been supportive.
Yeah, but see, overall, although the broader weakness persists with the non-ferrous complex, but we believe that lead prices should bottom out around 2050 levels on the LME, and on the MCX, I think 113.5, 113 level seems to be a good bottom. So for today, we prefer to buy lead around 113.5 with the stop loss of 112.5 and a target of 115.